The rules that make you a profitable trader are very simple. As a matter of fact, trading is very easy. The question is, what exactly makes trading easy? But you see, the thing is, you just need to know four major things for you to become a profitable trader. You probably think you need to read 1001 book for you to become a profitable trader. But here's the thing, you don't need all the knowledge for you to be a profitable trader. You just need knowledge enough that can make you a profitable trader. Every single thing just boils down to four major things, which I want to highlight in this video. The fundamental analysis, sentimental analysis, volumetric analysis, and technical analysis. And for me to be able to explain these four major things for you, let me tell you a story. So there's a man known as Mr. Frederick. Now, Mr. Frederick works for an apple drink company, and his job description is to go to the market and find the exact apple that the company needs to be able to make their juice. Now, when I mean finding the apple, it's not just going to find any kind of apple. So what Mr. Frederick does is, when he goes to the market, he looks for specific kind of apples. The apples that were harvested with specific weather conditions in mind, the kind of farmer that makes this apple, and if they can meet the amount that the company needs. So there are a lot of farmers in the market. There are farmers that make 5,000 trucks, trailers of apple. The farmers will make 100, the farmers will make 200, but all these farmers have different kind of apple. Mind you, Apple has a lot of varieties. And so this company are not just going for anything that has the word apple. They are looking for specific kinds of apple. So Mr. Frederick's job is to go to the market, look for the farmer that has the kind of apple that they need, and see if they produce that kind of apple in the quantity that he needs it, and see if the condition that the apple were harvested is right. So the production, the weather and everything, which means supply and demand and so on, is Mr. Frederick's job. And so every single time he goes to the market, almost every month like clockwork, sometimes once every 3 months. And all this thing is what you know as fundamental analysis. He's basically looking at the background. But you see, the thing is, while Mr. Frederick is doing this thing for his company and having all this deal going on, there's a lady known as Mrs. Sars. Now, Mrs. Sars works in a bank. What Mrs. Sars does is, when she goes to the bank where she works, she tries to buy little things and sell to her co-workers. There are times she buys chewing gum, sweets, and even apple drinks to sell to her co-workers. Now, Mrs. Sars goes to the market and basically buy what she feels is highly in demand at the time. And so there was this one time Mrs. Sars went to the market and every single person was talking about apples. Now, Mr. Frederick doesn't really mind if people talk about apples or not. All he does is he goes there, look for his designated customer, buys from him, and repeat the process every month. But when there's a high demand for apple, well, there's a benefit on his own side. He has a deal brokered with his farmer, and then his company tends to probably make more money if there's a high demand, and still make money even though the demand is not high as always. But Mrs. Sars typically waits for when there's a high rave of a particular product, and this time it just happens to be apples. And so she goes to the market and everyone is talking about apple, and there's this her friend that told her, yo, if you want to make money this period, go buy this particular apple drink, which, mind you, is the same apple company that Mr. Frederick works for. And so she goes, buys apple drinks, and takes to the office to sell, and people are super excited. Now she comes to realize that, okay, this particular thing she's doing is based on the fact that there's a lot of demand. So people want apple drinks, and she goes to the market, buy apple drinks. Next week, if the market changes and they don't want apple drinks or that kind of apple drinks, well, she goes and get whatever she feels her customer are going to need. So it's not like a thing she does full time. Mind, she's a banker, so this is like something that happens on the side. But so your question you ask is, how does this relate to trading? Mr. Frederick does fundamental analysis, which is the background stuff. Mrs. Sars does what is known as sentimental analysis, which means emotions in the market. People want this thing at this time. They're not always going to want it. Just the time where the nose mask thing was trending. A lot of people wanted nose masks as of the year 2020. But 2018, 2019, before the year 2020 where COVID broke out, nobody was super hyped or thought of going into nose mask production business full time. And even though people made millions and a lot of money was made in the year 2020/2021 from nose mask production business, I don't think there's anybody going into it full time as a business right now and hoping to get the same result as someone who went into that business at the year 2020. So there was a sentiment in the market, some caused by different things. Like COVID was not like everybody was happy to buy nose mask, but they had to because of what was happening. And so there's always an emotion that triggers the market. This is what's known as sentimental analysis. But there's one more person that we haven't spoken about, Mr. Vladimir. Now, Mr. Vladimir is an investor, a Russian investor. and invest into multiple companies. And there was this one time that Mr. Frederick went into the market to buy, the whole thing, and the company was blooming. And just before the whole emotional boom came, that Mr. Sass came to the market to buy all the apples, Mr. Vladimir spoke with Mr. Frederick and his counterparts and broke a deal with them that, hey, I like your business, I like the whole idea, but I feel something big is coming based on seasons and based on what's happening in the market, and I would like to give you an edge in the market. Basically, invest into your market. So let me pump money into your apple drink making business, and you go to the market, buy as more apple that you can, more than you usually would, come make more drinks, and by the time the whole thing is at its peak and people are asking for more, you don't face the problem of running out of stock or any of those kind of things, and then you make more production, you make more money, and then I just take out my investment and probably my own share from the money I've invested into your company. So Mr. Vladimir is a businessman, watches the market, studies what's going on, and puts his money big time and huge where he feels it counts. And this is what is known as volumetric analysis. So what he does is he puts in money big time into certain businesses, waits for the volume, demands to go really high, and when it's at its peak, he sells off or probably buys more, depending on whatever analysis he has done in the market. So he trades the volumes. He just invests once in a while. Volumetric analysis lasts longer than sentimental analysis, but fundamental analysis is a long-term game. Remember, Mr. Frederick, this is his full-time job. Come rain, come shine. Whether anyone is buying it or anyone is feeling happy, he's out there making sure the apples are right for the apple drinks and the company gets what they want. And so he's steady in the market, but Mrs. Sass, who is a once in a while kind of person, has to wait to see what is the major news out there, what is the big thing that's trending for her to be able to take advantage of the market. While Mr. Vladimir, who is an investor, has to wait and see in the long term, after this whole sentiment, or even before the emotions, based on market analysis and volumetric analysis, I want to put money into this market and see that there's going to be a high demand in the long run and make money from it. But while all these people are making big time money and using their own strategy to milk the market, there's one young guy whose mother has a retail shop, Toby. Now, Toby's mother has a retail shop. Toby typically just finished from secondary school and decided to help his mother out in the store. But you see, Toby is a geek. All those nerdy new kids. He helps his mom goes to the market once in a while, goes buy apple drinks, buy other stuff, and come put in the store and they sell, and just like clockwork, everyday kind of thing. So whether the market is going up, coming down, they just make little profits daily, every single day. But you see, Toby discovered something, that every time his mom goes to the market, there are certain times that nobody really cares about apple drinks. They buy it, the customers, it sells once in a while in their retail shop. But then there are times where it goes and it's like, everybody now see apple juice and everybody wants an apple juice. And Toby begins to ask his mom, what have you noticed so far in the apple business, in the apple juice business? What is happening with apples as the fruit and apple as the juice? What do you think is causing the spike and everything? And the mom doesn't really... The mom is a businesswoman, but it's not those one that has to have all those super details. She just tells him that, well, it's autumn, and during the autumn period, people typically want apple juice, and then the weather kind of gets dry, and so it just makes sense people want apple juice that are typically cold. But after the autumn period, when summer begins, people don't really want apple juice, but they want the apple fruit and all this kind of thing. And Toby took out his journal and documented the whole thing. He documented from the point where he realized that, okay, based on autumn period, the apple juice company tends to make more, and then people tend to demand more for this, and so sales typically will go up, and because sales go up and there's a high demand on it, then pricing will go up, and then he journals everything. Now, what Toby does not know is that Mr. Vladimir invested in Mr. Frederick's company. Mrs. Sass is out there buying the emotions, but he doesn't really know who is investing into what and what is happening, but he sees the result from outside. He just sees that there's a spike in the market and there's a down point in the market. Now, he documents everything and see that there is a pattern. All he has to do is wait for the right time, wait for the right things to happen in that order of the pattern, and then take advantage of the market. And what Toby does is what people call out to be known as technical analysis. Like I said, he's a geek. So he just looks at the technicalities of things and take advantage of the market. So he's probably not making massive millions like Mr. Vladimir would, or even steady millions like Mr. Frederick would, but he's getting his own share of the market daily. Unlike Mrs. Sass, who is waiting for certain period of time for her to take out chunks of the market. Now, there are risks for every single one of them. Now, Mrs. Sass could hear that something is probably trendy. She wants to go to the market and buy it. And after buying it, the trend dies faster than the amount she bought, or doesn't really last long enough for her to sell out. Or probably she sold out, went back to restock, and the trend goes off, and she's like, now I'm stuck with 20 bags of apple juice or 20 boxes of apple juice, right? And so Mr. Frederick has to deal with the fact that not every time apple juice is in demand, but even though people are still going to buy apple juice, so he has to be skeptical and careful at the amount of apples he buys every month or every 3 months when he goes to the market. Now, Mr. Vladimir has to be careful to understand that, okay, my analysis on the volume and the amount of people that are going to come into the demand for apple juice might not be correct every single time. So I need to be careful of how much I invest into Mr. Frederick's company, or if I should go all in on Mr. Frederick company. Now, with all these people facing all these technicalities, Toby has to be careful and ensure that this pattern repeats itself. Now, Toby is most likely will be the one playing the safest, you might think, but the question is he really the one that is safe at best? Let me know what you think. Which person's business approach is the best, and which of these strategies would make you more money? Now, like I said, it is a very easy market. You don't have to pick any one of them and be that one person. You can be the person who learns from every single person and take advantage of every single person at the right time. Now, Toby could be the person that waits for Mr. Frederick to go and buy bulk of it after Mr. Vladimir has invested, and waits for people like Mrs. Sass to spread the news about the hype of the apple juice market. And when every single one of them is lined up, just like a sniper that is setting up for his target, and with precision, he goes into the market and makes amazing amount of money. So yeah, let me know if you totally understand what fundamental analysis, sentimental analysis, technical analysis, and volumetric analysis totally mean. Because if you've noticed, all of these analysis initials are the first name for the people that are going to the market. Mr. Frederick, Mr. Vladimir, Mr. Toby, and Mrs. Sass. You're welcome.